All right, let's dive into the market action from November 26th. And what a day it was. It really felt like the market was split right down the middle. We saw some sectors just take off like a rocket, while in others, we saw insiders quietly heading for the exits. Let's get into it. But even with all that back and forth, one story absolutely stole the show. We are talking about a massive, explosive rally in the world of digital finance. FinTech and crypto stocks were on fire, and the reasons why are pretty fascinating. So here's how we're going to break it all down. First, we'll cover the big picture market story for the day. Then, we're going to zero in on that huge FinTech and crypto rally. After that, we'll look at the very different fortunes of some growth stocks, check out some really important moves in consumer and real estate, and then we'll wrap it all up with the final word. Okay, so let's set the stage. The best way to describe the day is really a tale of two markets. On one side, you had this incredible surge in tech and digital finance. But on the other side, we saw a lot of insider selling in companies that have been doing really well, hitting new highs. It's that classic push and pull between bullish momentum and people deciding to take some profits off the table. Now for the main event, the story that everyone was talking about, the absolute bonfire that was the FinTech and crypto rally. And I mean, this wasn't just one or two stocks having a good day. This was a really broad, really powerful move that lifted pretty much the entire digital finance space. And leading the charge, that would be Robinhood. The stock had an incredible day, surging more than 7%. So what was the spark that lit this fire? Well, this is the really interesting part. It had nothing to do with Robinhood's actual business. The whole rally got kicked off by news that CEO Vlad Tenev's other company, his AI side project called Harmonic, just hit a massive $1.45 billion valuation. That created this amazing halo effect, boosting everyone's confidence in Tenev and sending Robinhood stock flying. And that positive energy just spilled over everywhere. Coinbase jumped over 6%, especially after analysts called its recent little dip a temporary air pocket and a great buying opportunity. Upstart got pulled up in the current, gaining a solid 3 to 4%. Even Block held steady, showing just how much strength there was across the whole sector. But maybe the single most aggressive bullish call of the entire day was for SoFi. I mean, analysts aren't just saying they like the stock. They're breaking out some really, really strong language to get their point across. Now get this, SoFi's stock has already doubled in the last 6 months. Doubled. And still, some analysts on Wall Street are saying they see another 39% upside from here. They're calling it a table pounder, which in Wall Street speak means buy this thing now, it's an incredibly strong conviction. The mood was so positive, it just completely washed away any concern about a small insider sale. Of course, not every story in FinTech was quite that simple. Take Affirm, for instance. You had Truist Securities come out and say, yep, we still rate this a buy, but, and this is a big but, they also lowered their price target from $90 down to $85. It's just a perfect reminder that you've always got to read the fine print in these analyst reports. Okay, let's switch gears a bit and talk about growth stocks. This is where that tale of two tapes idea really, really comes to life. It was a day of some huge winners and some stocks that were just stuck in the mud. And the undisputed champion in the growth space today, Lemonade. It just had a massive day, putting up an 8% gain and pushing right up against its 52-week high. So what was the fuel for this move? A huge vote of confidence from Wall Street. An analyst at Citizens JMP jacked up their price target from $60 all the way to $80. But, and you're probably sensing a theme here, with big gains comes the temptation to take profits. We saw an executive file a plan to sell some shares, which is often a signal that insiders are starting to cash in on a big run.
Okay, now for a complete 180. Let's look at InMode, a company that had a very, very different kind of day.
So while Lemonade was soaring, InMode was just flat, stuck in neutral, trading around $14. There was no new news, nothing to give it a push one way or the other. Really, the stock is still trading under the dark cloud of its last earnings report back on November 5th, when it revealed a pretty significant drop in revenue. All right, let's pivot to the consumer and real estate sectors. The big story here wasn't some huge rally. Nope. It was a rising tide of insiders deciding to sell stock after a really strong run. And to understand this, we need to know about a key document called a Form 144. So what on earth is a Form 144? It's actually pretty simple. It's just a public notice. When a corporate insider, think a CEO, a board member, a big executive, plans on selling a large amount of their company's stock, they have to file this form. It's basically them giving the whole market a heads up that a sale is coming. And today, we saw a whole bunch of them. The co-founders of Wayfair filed to sell 300,000 shares. Over at the real estate firm Compass, the general counsel is planning to sell over 55,000 shares. And then there's Dutch Bros Coffee, where a founder-related entity filed to sell a massive chunk of stock worth roughly $34.5 million.
And that Dutch Bros situation is just a perfect snapshot of the conflict in the market right now. The bull case? It's obvious. The company is growing like crazy, opening new stores everywhere. That's a fantastic growth story. But the bear case? An insider is cashing out over $34 million in stock. So as an investor, how do you balance those two completely opposite signals?
And finally, here's what happens when a company's earnings just don't meet expectations. After BellRing Brands reported some disappointing numbers, Wall Street acted fast. JP Morgan took a knife to their price target, slashing it from $45 all the way down to $36, and other banks did the same. It's a crystal clear signal that sentiment has turned negative.
Okay, let's pull it all together. What are the key lessons here? What should we really take away from all these moving parts in the market today?
So if you remember 3 things from today, make it these. First, digital finance was, without a doubt, the place to be. The sentiment was just incredibly strong. Second, keep a close eye on insider selling, especially in stocks that have had a huge run-up. And finally, remember that while analyst ratings are important, the details, like a sneaky price target cut, can tell you the real story.
And all of this leaves us with the big question of the day, doesn't it? When you see these powerful, exciting rallies running headfirst into a wave of insiders taking profits, what does it mean? Is it just a healthy rotation, with money moving to new places? Or is it maybe an early warning sign of a storm on the horizon? Definitely something to think about. Thanks for tuning in.